Mike and Ben, we're going to come up and they're going to talk about how to reduce your rent, operating expenses, and facility costs. These are going to really be short, brief descriptions, but I know it's going to spike your interest, and you can contact them and get further information. I happened to meet them. It was an accident, and then I had, I think it was Mike. I don't know who contacted me, and then I said, let's look into this. So they asked me for my lease and review my pass-throughs. You know, we just signed a check. We just pay the darn thing, and they give you a bill at the end of the year saying, well, you've got to pay this extra for the pass-throughs to adjust, and none of us sit there to really see if it is what it is. That's what these guys do, and they can check and see. So they're going to give you further more information on that. So come on up.
Absolutely. Thank you.
All right, do you want to go?
Oh, sure. Thank you very much. Appreciate it. So this is going to be more conversational. There are some handouts being passed around, but it's totally optional. You can contact us with any questions or anything related to your own lease. But what we do is we save practices money on what's usually their second largest expense and largest liability, which is their facility and their lease. So typically the way in which we get started is to analyze the existing lease. It's very important as a practice when you have that lease, it doesn't just go in a drawer. It's sort of a living and breathing document throughout the entirety of your occupancy as a practice. One of the things that's very important to do, as you can see from the handouts, is basically abstract and understand what the meaning is behind all of these terms. It's important from a business perspective because hypothetically, your sublease and assignment rights. What if you're thinking of transferring ownership of the practice? That's not something that's necessarily automatic. What if you're bringing on other partners? What if you're acquiring a practice? How are you analyzing the lease? If you don't actually go through certain steps to sublease and assign, for example, or perform a certain alteration, you could actually put yourself in default of the lease. The other thing that analyzing your lease does is it benchmarks you to market for your own planning, but it also discusses how your particular operating expenses are treated. Now, what do I mean by operating expenses? Those building pass-through statements that you get from the landlord that look a little bit like this. Doesn't, make a whole lot of sense when you get it as a practice. What are these expenses? How much are they going up? Is it even appropriate that I'm being charged for these expenses? The lease abstract will help guide you in terms of what expenses are actually allowable, how are certain elements of those expenses treated, and how should they be treated. Most groups would look at this statement, see what the costs are, maybe verify to see if your pro rata share is correct, your percentage of the building matches up with the lease, and then pretty much pay the bill. The things you want to look at are the expenses that are being charged allowable? Is there additional backup data to justify the expenses to make sure that the expenses within those expenses are allowable? For example, capital expenditures, improvements to the building that aren't actually improvements to the operation and repair of the facility itself. Are expenses aggregated properly? For example, are utilities and taxes and operating expenses all charged separately, or should they be off, or should a reduction in one category of expense offset an increase to another category of expense? Other things to look at are our operating expenses being grossed up based on fluctuations to the occupancy of the building. You don't want to be charged for more operating expenses to the building just because the building was largely vacant and then had a boost in occupancy and therefore had a boost in operating expenses. So there are another number of things that you need to look at with respect to these reconciliation statements to make sure that you're actually being charged appropriately, because a lot of people focus on what their rate is, but it's about the rent. It's about your total occupancy costs, not just what the rate is. And one big component that can comprise 20-30% of your overall occupancy costs over the term of your occupancy, which is usually sometimes about a decade long, are these pass-throughs that get added to your expenses year after year by the landlord. So that's very important. Another element of that you'll see in your packets is the property tax bill. You're also charged based on the taxes to the extent that the increase in the building. Very important to understand to make sure that if you're actually being charged the right tax bill, sometimes landlords contest the tax bill, they usually do. Are you actually getting the credits that they're getting, or your pro rata share of them? Another thing, I'll move quickly here, is your space measured correctly? We've had landlords that have double counted parts of the core, the common areas, and charge those additional areas to the tenants. And again, you're paying a higher rent in that case. The rate didn't change, but the square footage is actually higher than what it should be. And you can get a lot of money back if the space is mismeasured in some way. It's also very important to understand how the space is measured, what method of measurement was using, because you're not just paying for the area within your walls, you're paying for your pro rata share of the common area, and how that is calculated and whether or not it's verified can have a big, big impact on your rent over time. So again, wanted to be very brief. These are a few takeaways, a few key things: abstracting the lease, analyzing the reconciliation statements, verifying your space measurement that we encourage every practice to do. Any point during the lease, even if you just signed a lease, it's very important to do so you have a full understanding of your lease, the expenses, and whether or not you're paying on the right amount of space. That will help you not only make sure that you're not overcharged during the lease, but it will very much help you when you're a year or two away from an expiration and it's time to renegotiate a lease, or if you're thinking about purchasing a practice or aligning in some way with a practice that has a lease in place. It's important to go through this type of analysis. Do we have time for questions? Or?
I have a question, because I used them and they reviewed my lease, and I was just very impressed. As you can tell, this is Chinese to us. No, you know, we just don't get any of this, and that's what they do. So if you want to rely on somebody who knows what they're doing to figure it out. So I'm going to ask you, how do you all get paid?
Sure.
Because it didn't cost me. Okay?
So it's a very good question. So our initial analysis, we're usually happy to do an initial analysis for a practice at no cost. That's sort of our loss leader of doing business. And then the how in which we get paid is usually later on, because at some point the lease expires.
Yeah.
And when you're a year and a half plus or minus out, that's the time where we're typically engaged at that point to renegotiate the lease, and then we're sharing in the savings, so to speak, as part of that. Or it's the practice needs another facility, another office somewhere, or needs to expand, or what, or is just nice enough to invite us to talk with several other friends who may also need our work. So we typically do our initial analysis as sort of a loss leader, what I just described, and then later on there's a project for us. We do all sorts of things, from managing the construction, or doing the lease renegotiation, or negotiating a lease for a new office. We've done fair market value studies for Stark Law compliance. We were actually just in the Washington Business Journal the other day for doing one of those for another practice, GYN in Fairfax. So we do a lot of different work at the appropriate time, but it kicks off usually with a no cost, no obligation analysis, so you can get to know our work and have that important analysis and reference guide for your practice.